for joining us for CJM Summer Market Update. I'm here with Kevin Donovan, our Portfolio Research Director, and Kevin's going to tell us a little bit about what the market's done so far this year and what we can expect in the rest of the year ahead. So Kevin, 2019 started out pretty strong. Can you tell us how the market's been?
Sure, it's a very strong start to the year. The first half has been the best first half for the S&P 500 in 20 years. It's up 17%. A lot of that happened in the first quarter when we were recovering from the December sell-off, but the second quarter was up about almost 4%, which is pretty good for a 3-month time period. It was led by growth stocks, technology stocks did particularly well, mid-cap stocks did really well. On the international side, international stocks did well, not as good as the US, but up 14%. If I said international would be up 14% in the first 6 months of the year, you'd be pretty happy. So the strong dollar kind of held back returns on the international side, but still doing really well. Bonds up 6%. Usually we hold bonds for stability or for income needs if you're retired. A 6% return in 6 months is just a bonus on top of all that. So it's been a very strong start to the year.
Considering it's only halfway through the year, that is very strong. Now, it sounds like good news all around, but when I'm meeting with clients, I don't sense that they think we're worry-free. I assume you're going to recommend that we continue a balanced approach?
Yeah, well, there's always something to worry about in markets, and right now it's no exception. There are some certain signs out there that the economy, the growth rate of the economy, may be slowing. And the Fed has talked about that, and they've said that they're willing to act to lower interest rates should that happen. So that's a concern. We're not necessarily expecting a recession, but the growth rate at this point may slow a bit. We're 10 years into the expansion, it's the longest expansion on record. We're just naturally may see some signs of that. Also, corporate earnings are expected to decline for the second quarter in a row this quarter. That hasn't happened since 2016. We also expect some decline in the third quarter as well, before it picks up again in the fourth quarter. And thirdly, trade. It's in the news. It's uncertainty. Tariffs act as a tax on consumers. Companies are reluctant to invest if there are some uncertainties around trade issues, and we're starting to see that now. Any resolution of that would be a positive for the market, but right now it's just uncertain.
So balance still makes sense. Now, Kevin, the hard part, I'm going to ask you to polish up your crystal ball and tell us where do we think the market's going to go for the rest of this year?
Well, that's a tough one. I wouldn't necessarily expect another 17% gain for the next 6 months like we see in the first 6, but we're not forecasting an imminent recession or a major sell-off. But it does pay to have a balanced, diversified approach in your investments to benefit. If the market goes up, you want to benefit as much as possible on that upside. If it goes down, you want to have an allocation to fixed income to cushion yourself on the downside so you're not exposed to the full effect of any market sell-off.
Okay, great. Kevin, thank you for your time and helping. Since you lead our research of our investments here at CJM, we appreciate you joining us, and give us a call if you have a question. Thank you.